Hi, this is Adam Huxma from Projection Hub, and I'm going to walk you through our balance sheet template. And there's a lot of balance sheet templates out there that just have the different balance sheet categories, but don't really help you figure out what you're supposed to put on each balance sheet line item. And so we've done things a little bit different. We created a page here where we ask plain English questions that you can answer. And then those answers will end up populating this balance sheet. And so ultimately, you'll have this balance sheet that will hopefully say that it's balanced here once we're done. So I'm going to walk you through this. So the first thing you can do is just put in the date that the balance sheet is for. So in this example, we've got February 1st, 2022. But you'll want to, whatever date you're making the balance sheet for, you'll want to put in there. And you can put in your company name. And now, this is asking how much cash do you have in all company bank accounts. And again, this should be as of whatever date you put up here. So as of that date, how much cash you have in the bank account. Let's say $50,000. How much do your customers currently owe you? So this could be also called accounts receivable. So let's say our customers owe us $10,000. How much did you pay for the inventory that you currently have on hand? So this should not be how much do you think you could sell the inventory for. It's how much did you pay for it yourself. That's the number you want to put in here. So you might buy T-shirts for $1 a piece, and you might sell them for $10 a piece. You'd want to put in the $1 a piece value. What did you pay for them, not what you think you could sell them for. So let's say we've got $10,000 worth of inventory. And we ask, what dollar amount of expenses have you paid for up front that you haven't used yet? So this could be, let's say you pay for some software and you pay for it annually instead of monthly, and you've prepaid for a year. Let's say the software is $1,000 a month, so you paid $12,000, and maybe only 2 months have gone past in that contract, so maybe you have $10,000 worth of prepaid software. You could put that in there. Do you have any other assets that you could sell for cash in the next 12 months? So this could be if the company owns stocks or bonds, and any other accounts, bank accounts, that sort of thing that you haven't included. Let's say we've got $20,000 of stocks. Now, how much did you pay for the machinery and equipment that you currently own? Again, this is not what you think the machinery and equipment is currently worth. It's how much did you pay. And so let's say we have $50,000 worth of, $50,000 worth of equipment. If you have $5,000 worth of furniture, again, all of these are what did you pay for, not what you think they're currently worth. How much did you pay for any improvements to a space that you're leasing? So if you are renting a space, and you, painted and busted out some walls, put up some new walls, that sort of thing, had some renovations happen before you moved into that space or after, the dollar amount that you spent on those renovations would be leasehold improvements, and that's what we want you to put in here. Let's say that was $40,000. And how much did you pay for land and buildings that you currently own? Let's say we don't own any land or buildings because we have leasehold improvements here that we're renting. So probably if you have leasehold improvements, then you wouldn't be expected to own land and buildings. Or if you own the land and you own the building, then put the dollar amount you spent on the building that you own here instead of putting the renovation costs in the leasehold improvements section. how much did you pay for any other fixed assets that you currently own? So any other assets that we forgot to get up here, if you think of anything, you can put that here. Keep that at 0. Now, what dollar amount have your assets depreciated since you purchased them? So this is a really loaded and complicated, could be a complicated question, because there's a difference between depreciation from a tax perspective and depreciation from maybe a book or accounting perspective. And this is really probably something you need to talk to a CPA about, and you need to make a selection, how you want to handle and calculate depreciation for your specific assets. But we also understand that a lot of small business owners might be using this template because you don't have a CPA, and so if you haven't been adding depreciation on your previous tax returns, that'd be the first place I would recommend that you look. Go back to your previous tax return, see how much you've included in depreciation, and use that as a frame of reference. But let's just say, in this example, we've got $95,000 worth of equipment, fixed assets here. Let's say those have depreciated by $50,000. All right, other assets. So again, these are things like intangible assets like patents, trademarks, copyrights. These are treated very specifically from an accounting perspective, and so again, I would recommend if you're going to put anything in here, you really should probably be talking to a CPA. I think most small businesses are probably not going to have any patents or trademark value, copyright value on their balance sheet. So I'm going to just leave that as 0. I have some links here on all of these to some different articles that are helpful that tell you a little bit more and kind of explain the complexity of some of these things. What dollar amount of customer deposits are you currently holding? So this is a little more straightforward. Let's say someone places an order, customer places an order with you. It's a large $10,000 order, and you ask for $5,000 of that to be paid up front. So you're holding a customer deposit of $5,000. What is the value of goodwill on your balance sheet? Again, I just put ask your tax accountant. You can learn more about that here, but I would not put any number in there unless you are certain about that, because it's likely to be incorrect. I'm going to leave that at 0 for this example. Do you have any other assets that we haven't already asked for? You can enter that here. Let's leave that as a 0 as well. All right, now we get to our liabilities. How much do you currently owe in unpaid bills? This is your accounts payable to suppliers, vendors, contractors. Let's say we have about a stack of about $25,000 worth of bills that we need to pay. How much does the business currently owe in unpaid taxes? I've got a typo there. Owe in unpaid taxes. We'll say $5,000. How much do you currently owe in short-term loans that you have to pay off in less than 12 months? So this could be credit cards. Let's say you have a credit card balance of $15,000. How much will you have to pay in the next 12 months on any longer-term loans that you have? Really, this is a little tricky. So if you have you might have a 30-year mortgage or a 20-year mortgage on your building, or maybe an equipment loan, and the total loan value let's say the total loan value for your work vehicle is $20,000. Well, what we're asking for here is what are the payments you're going to have to make in the next 12 months. And so let's say you have $1,000 a month payment. you would just take that 1,000 a month payment and multiply by 12 to come up with your 12,000 in the next 12 months that you're going to have to pay. That's what we're looking for in this field. And then do you have any other bills or debts that you need to repay in the next 12 months? Maybe you got a short-term loan from a family member or something. You could put that in here. Now, these are longer-term liabilities, so this is asking how much do you currently owe in loans to banks or other business lenders. These could be SBA loans or maybe loans from online lenders or just a bank loan. And since, so this would be the good example. Let's say we had that truck loan or that vehicle loan that we said was $20,000, and 12,000 of that was going to be paid in the next 6 months. But go ahead and put the total amount that you of that loan in this box. Now, how much do you currently owe in loans to owners or other individuals? We put a $5,000 loan here for friends and family that is short term. So since this is a short term loan, I'm just gonna leave it here. I'm not gonna put that back in here. And then, do you have any other long term debt that hasn't been included up here that we don't know about? Now, how much has been invested into the business? So let's say you've put in, maybe you put in 100,000 of your own money, and then maybe you have a partner that put in 50,000. So let's say we have 150,000 that's been invested into the business. And then this is asking what is your retained earnings? So retained earnings is a cumulative profit or loss of the business since the business started. And so if you've been in business for a number of years, we're looking for you to add up the profit that you've made every single year, add that all together, the profit or the loss, and that's your retained earnings, and that's what we want in this box. And so, you could look back on your tax returns or talk to your accountant about how to come up with that or how to calculate that. But let's just say we've had 50,000 worth of cumulative profit over the years. Maybe we've only been in business 2 years and we had a $25,000 profit each year. And so far this year, let's say it's been a great year, and so we've generated 40,000 profit so far. So that's what we're looking for here. So this number here would be previous years, not the current year. So you should, if you did 25,000 each of the last two years, put in 50 here. And then if you're in the year that you're currently in, if you've already done 40, that's what you want to put here. Don't add these two together and put in 90 up here. This box is for previous years. This is for the current year. Okay, so that's all the questions that you have to answer. Now, like it says, moment of truth. Let's see if it balances. And most likely, it's not going to balance because you've just answered a bunch of questions. And we'll look here and see, yep, it does not balance. And so we're going to look and see why and understand a little bit more about what a balance sheet is supposed to be doing. So the balance sheet, or the equation for a balance sheet, is assets, your total assets, which we can find right here, of 150,000, should be equal to your total liabilities plus your owner's equity. So here's the problem. So we see our total assets of 150,000 should be equal to this, total liabilities and equity of 310,000. If those two equaled, then this would say, hey, our balance sheet balances. So why might that be? Probably the reason is because if you're certain that all of these numbers are correct, I'd say there's a couple areas that could be throwing you off. Depreciation is probably one that you may have just made up a number, and so that could be throwing you off. I would also say that your retained earnings in your invested capital might be, this is probably what is wrong. So you're probably more likely to know, yep, I know I've got these liabilities. You probably know what assets you have. You know, these are, more certain answers. And so what a lot of times is going to happen is it's probably you have a mistake in here. Maybe you didn't calculate your retained earnings right, or you just guessed. You thought, oh yeah, we probably had $50,000 of retained earnings, and that's probably where your issue is. Or maybe you thought you've invested 150, but if you were to talk to your tax accountant and go back and look, they'd say, oh no, you invested 150, but remember when you took 75 of it back out? Oh yeah, forgot about that. Well, yeah, so that would have come back out of this number. And so we're at 310 versus 150. So we know we need to reduce our liabilities and equity by 160,000, or increase our assets by 160,000 for this thing to balance. So I'm going to say, yeah, let's say we forgot we took that 50,000 out. So there's 100. And oh, you know what? Maybe instead of generating 40,000 in profit this year, we're actually at negative 20,000. Maybe we haven't done our bookkeeping right, and we realize we forgot some expenses. Oh yeah, we're actually at negative 20. So now let's jump back over here. Okay, now we balance. So our total liabilities and equity is 150,000, and our total assets is 150,000. So here's the thing: there could be 1,000 different reasons why your balance sheet isn't balancing, and again, I would recommend that you talk to a CPA about your specific situation. But what we're trying to do, we know that a lot of folks that use our tools are very small business owners and just looking for something quick, and maybe doesn't need to be perfect and audit proof just yet. Maybe you're just trying to pull together a balance sheet for your own internal planning, and you want to see this. This may be good enough, and you don't need to spend thousands of dollars working with your CPA to make sure that everything is perfect. Now, if it needs to be perfect, I highly recommend that you're not just guessing on these numbers, but that you're talking to an experienced CPA that understands your business and can work with you to figure this out. One more thing I will mention is that if you need a projected balance sheet, so this is really just asking what's your current balance sheet, but sometimes a bank might ask you for your current balance sheet, but they might also ask for a projected balance sheet. And that is really tough to come up with. We just saw when you answered these questions, it didn't balance, right? Well, it's even harder when you're working on a projected balance sheet. So we have a number of full financial projection templates. And really, in order to come up with a projected balance sheet, you need a projected income statement and a projected cash flow statement as well to be able to project your balance sheet correctly. And so over here, we have 50 industry-specific templates for all sorts of different types of businesses that include 5 years of projected income statement, cash flow, and balance sheet all put together. And this, when you fill out one of these templates, it's going to force your balance sheet to balance. You can be sure that your balance sheet will balance because they're an integrated set of financial statements. And so you can learn more by clicking this link and move forward that way. Now, again, your balance sheet isn't balancing. I would recommend talking to your CPA or taking a stab at utilizing one of our premium templates, or start just double checking all of these numbers to make sure that your assets, equals your total liabilities and equity. All right, that's all we have for you today. Thanks. Good luck.